I see a lot of beginner stock market investors who don't know what a stock exactly is. They hear about the stock market and the stock market investing here and there. They may also own some stocks, but they don't know what a stock exactly is and what are their rights as a shareholder. In this video, I'm going to share with you the concept behind the word stock. Here's the table of content for this video and also the timestamp. You can also find them down in the description. I'll start this video by explaining the difference behind the word stock and share. Then I'll continue by explaining the difference between owning a business and owning a stock. At last, I'll wrap up this video by explaining the basics of owning a share and your rights as a shareholder. Now, the first topic was the difference between a stock and a share. So, what is a stock? To put it in simple words, it's ownership of a company. To put it in complicated words, however, a stock is a security that represents ownership of a fraction of a corporation. Now you may ask, what is a share then? Share actually is the unit for stocks. For example, we use kilometer or mileage as a unit for distance because we can't count distance. It's the same for shares and stocks. Shares are the unit for stocks because we can't count stocks. Actually, stocks are the equities of a company that is available in the market. Equity cannot be counted, so we need a unit like shares so we can count the equity. For example, we can't say I have 3 Apple stock. That doesn't mean anything. We have to say 3 Apple shares instead. If you want to know how much equity there is in each share, you can just look up the stock price. So now you know the definition of a stock and a share. The second part of this video is dedicated to the difference between owning a business and owning a stock. When I started investing, I always used to compare owning a business and owning a stock in the back of my mind. I used to think that they are the same, but they are far away from being the same. Companies in the stock market are corporations. Corporations are a special type of organization because the law treats them as a legal person. It has a separate legal identity distinct from its owners. In other words, corporations file taxes, can borrow money, can own properties, can be sued. The idea that a corporation is a person means that the corporation owns its own assets. While if you have a business, the business itself is not treated as a legal person. The owner of that business who owns that business is treated as a legal person. That's the difference between owning a business and owning a share or a corporation. When you own a corporation, you don't have to include the revenue numbers in your own personal tax filings. By the way, there is a quick technical point that I want to add here. Stockholders do not own corporations. They own shares of the corporations, and the corporations are owned by the shareholders. Now, the third part of this video was about owning a share and shareholder rights. In this video, I've said many times that you are a part owner. You are a part owner of that corporation. What do I mean by that? If I buy Apple stock right now, I'm legally part owner of that corporation. As a shareholder, I have a few rights like voting power on major issues, ownership in a portion of the corporation, the right to transfer ownership like selling your stock or shares, the right to receive dividends, opportunity to inspect the books and records of the corporation, and at last, the right to sue for the wrongful acts of your corporation. Now, you may ask, okay, now I have 1 share of Apple. How much of that company do I own? Here are the Apple shares outstanding as of right now. So you own this much of Apple if you have only 1 share. Congratulations. Now, I want to give you another example with rounded up numbers so you better understand the next part that I'm going to discuss. Let's say you buy 1 share of company X, and the company has 100 shares outstanding. Sorry for my handwriting, it's not easy to write with a pen, I'm not used to it. In that scenario, you own this much of that company. You have 1 share among 100 shares, so you have 1% of company X. As a part owner of that company, you have a portion of both assets and liabilities. Meaning, let's say if the company makes $1,000 per day, 1% of that money is yours because you own 1% of that company. So you are making $10 per day. And if the company is losing money, let's say they are losing $1,000 per day as a company, you are also losing $10 per day individually. But let's say each share costs, one share, let's say, costs $100. So with that $100 investment, you can make unlimited amount of money. So you can make $9,999,999 with only your initial investment, which was $100. But the maximum amount that you can lose is $100. You can't lose more than $100. And that's something I like about the long-term investment, because you are not risking more than what you can invest. And that's what makes this investing strategy really safe. And that's why this strategy is the best for beginners. So remember this. You can't lose more than 100% of your investment. That's it, guys. Hope you got a lot of value from this video. Be sure to ask your questions down in the comment section. I'll do my best to answer them. I may even create another video just answering your questions. And thank you very much. Have a great day. Peace.